All right, this is going to be the recap for Friday, Freaky Friday, June the 8th of 2012. It's considered a red day, and the reason it's considered a red day, we kind of just got sprung upon this, and this is a good lesson to be learned. It's a yellow day because it's Freaky Friday. And when we looked at the market volume was less than 200,000 by the exchange open. That's low volume, and that makes it a yellow day. So two yellows equal a red. On a day where you have two yellows that equal a red, and even in some cases on some red days, we're going to put asterisks next to those particular things so that we know. We really wanted to look at whether the volume would pick back up because it was contract rollover, and most of the volume should have been picking back up on this market on the new contract. So he said we'll trade the first hour and see how it goes. And of course, the first hour was quite profitable for the conservative trader with 1.75 points hitting the goal or close to it. The less conservative trader in the first hour, loss of 1.25 points, 3 total trades, 2 winners, 1 loser, and that's the way it went. You can see it right here, 2 longs, little half point profit here, 1.25 points here, 1.75 done. Took this loser here to the downside, no way to avoid it. It looked like it was going to go down, and it didn't. But we did mark what the rest of the day did pretty much. And you can see we did have a little bit of a winner here. Our second contract, we weren't able to catch this run up. It came back and got us for a break even as it went up 6 ticks and then pulled back to hit the stop. And then you got a loser here that was for a tick, all in all. Another loser here for 3, and then it was pretty much over for the day. But that's the day. Again, Freaky Friday. It was a red day. Probably should have just avoided it altogether. Bye-bye, folks.